Well, hello guys, and glad to have you on board again. Today we're Wednesday, which means we're halfway through the week, and we're going to look at the lower time frame charts, H1, H4, and alike, looking for flows, following the guidelines of our low-risk strategies, the ones we pay attention to in the weekly reviews that are released in TradingView. So, as usual, I'm not going to take too much time going into the details of those low-risk strategies. Have a look at the TradingView's review if you want those. So TLDR in here is that we're still in the same weekly chart reference in the S&P 500. Which means the flow trading happens in H1 time frame, and it's definitely have been the case so far. We had a couple of flows. We've mentioned that last week as well. The third flow has been pretty weird to navigate in terms of entry prices. Reason why, personally, earlier this week, or by the end of last week, I don't remember, I decided to take some partial profit takings to pay for my stop loss, basically because where I have been entering my trades was far off the bottom. So actually, this is where the stop loss is, meaning that if I get taken down for whatever reason, remember that a flow trading is nothing like knowing the future. It's just dumbly and blindly following what the market maker is likely doing as well, without nearly knowing what it actually is doing. Though things can change, and don't try to make it overcomplicated, we're trading flows, and flows are really the dumbest way of trading markets. It's just risk limiting on volatility derivatives, on volatility boundaries, and just trying to guess. And basically letting the market maker do the rest. So the thing is that in here, like I said, I have entry prices which are far from being perfect. Though in that perspective, I decided to take some marginal profits in here, something close to 25% of the initial positions, because it manages the way to pay for my stop loss. Basically now, my stop loss is somewhere around there, and if the prices decided to go back there, I'm going to be stopped out. Like I said, flow trading, don't make it overcomplicated. If the market doesn't want to go up, I'm going to be out and wait for new opportunities. Until then, though, my stop loss is going to be paid. Though the thing is that the only thing that I've done is locking some partial profits, marginal ones. And remember the key element in here, I'm not limiting the gains. I am forecasting that this flow will succeed, and in order to do this, we need to break the previous high points. Depends on whether or not you want to account for that thing. Though let's call it a wild area is around 4100. So this is where this next and final flow, because we don't trade any more than 3 flows in a sequence, though this one will trigger at 4100. And until it does, well, there's nothing that prove me either right or wrong, though I'll just assume that I'll be right until I am proven wrong. Proven wrong meaning my stop loss is taken down. Anything that happens in between, I don't mind. So that's really the way it is. The short-term context is like we have a volatility alert in here, which tells me one thing, okay, that it can be very violent in here. So that's also the reason why I would advise to be a bit cautious. As long as you trade positively, there are 2 things that can happen. Either you're going to be taking a stop loss or you're going to have more gains. But net, what you need to understand is that what were you doing in the first place? I am trading flow, which means I don't know nothing. I don't try to anticipate, I don't try to know what the market maker is doing, I'm just limiting my risks and letting him do the job. Though in that perspective, well, the 2 outcomes are very likely. What I know for sure is that both ways I cannot lose money. I can either make a nice gain or make no gain. And I think that's the most suitable position to be in. Anything else, anyone else will just come here and say, well, Phil, you have a gain now. You should take that gain because the market is going to go down. Do you know what I am answering to these people? The fuck do you know? I don't know anything, and certainly neither do you. So try to be smarter than that and try to say, well, if I have a gain, is it worth it to take it now? Or is it worth it to just do the thing that I'm supposed to do as a trader, which is, what the fuck do I do? Am I just here to make money on a single trade, or am I here to apply a consistent strategy hundreds of times by following the fucking guidelines of that strategy? Because if you're doing the first, if you're just here to make money, well, good luck on that one. You can make some at some point, lose some at some point. Net, we know that most retail traders are not making money or very little, and some large margin of them are actually net losing money. So in the opposite direction, what professional traders do is painfully applying the same old goddamn rules and not trying to make sense of our irrational context. We're in pure chaos in here. Trading flows is not where the low risk is. Remember, the low risk is there. This is where odds are certainly not 50-50. They are statistically relevant odds of turning profitable in low risk strategies. The flow trading we do on those lower time frame is no more than just arbitraging volatility. It's dumb as fuck, and there's no way you can try to anticipate the market. So try to make it easy on you guys. You just follow a set of rules, which is, well, my set of rules is I buy this goddamn volatility boundary, I will put my stop at break-even ASAP, which means in here I can't do it because my stops are too high, so I will pay for this. Like stop at break-even is the equivalent of a paid stop. So this is basically what I do. Second step is there are two choices. Either the market is going to go up, and it's certainly not because I bought, and yeah, I'm the smarter trader out there. Okay, no, like I said, this is dumb. This is the market maker. You don't have any control over prices. Let it do the job. So either we do 4,100, and of course prices will keep surging and the like, and you're going to take a nice gain. And what I know is that I don't ever try to know where this flow will stop. All I know is that I let myself ride with the market maker as long as the context isn't reversed, followed by a third range boundary. When this happens, I'll take my profits. That's really the dumbest way of doing things. I don't know how far this next flow is going to go. The further, the better, but I certainly don't know anything. What I know instead is that if I follow this simple set of rules and I do it 100 times, I am sure to make money. Or at least the odds of not making money out of 100 trades are close to zero. Though the thing is really that. Now, if you take those same odds on 5 steps, well, basically, what do I know about the next 5 flow trading that I will take? Well, I don't know so much about that. It's probably going to be 3 wins, 2 losses or so, but I don't guarantee. It could be a set of 5 losses, and that's where things tend to be tricky. On these things, which means basically the odds are really not that great. This is chaos out there. We're trading volatility, so no one knows about what that thing is going to do. But the only thing you know is that, well, a series of 5 losses in a row, well, that can happen. It happened to me in the past, will happen in the future, just like a series of 5 gain had happened as well. That's really the way it is. Don't try to make it easy on you guys. Because what I've seen recently is people saying, well, Phil, just look at the market. Recently, anything that there has been something like that, prices going up, then we were going 180 degrees on the opposite direction because Powell came to destroy the market or whatever reason that is. Well, if something happened 4 or 5 times in a row, does that make it a pattern? That's really the question you should ask yourself. Does that make it a pattern? Something that happened 4 times, even if it was 4 losses, you would definitely, as a normal constituent human being, to say, well, I've been fucked 4 times. Well, I'm certainly not going to be fucked a 5th time. So this time around, I'm going to take my profits. Well, guess what? This time, this is the one. They're going to take all the gains to compensate for the previous 4 losses. And this time around, you're going to take the profits. And you could have made triple that amount. That's really the reality. That's the way it is. Why is that? Well, because there's no way you should have controlled this. And you shouldn't even have tried. The thing is that you are sure this thing works out of 100 times. Don't try to create subset of statistics purely created by your mind. That certainly doesn't exist because there is no statistical occurrence of something that happened 4 or 5 times. There is a beginning of something that turns out to be statistically viable when you've been trading something 100 times. But that also means you need to trade it exactly the same way, meaning that if you want to create statistical behavior, you need to repeat exactly the same way. Though there's one thing you should never do, is to say, well, I am in a flow trading context. This flow is going to activate at 4,100. Whether it will or not is none of my concern. I follow the goddamn rules, and the market will do the rest. That's the mindset you should have now. Not trying to say, well, I've been fucked 4 times, maybe this time around I should take the profit because I think the market is going to go lower. And if it does, I'd rather like to take the gain now rather than being stopped at break even. Don't ever do this. What you've just done is what every beginning in the market do. It takes the set of rules that it's supposed to apply, and it just says, well, yeah, not this time around. I'm not going to apply those rules. It feels like it's dumb. It doesn't work. I mean, 4 times it's gone proven wrong. Yeah, what the fuck is that? I mean, I've been proven wrong much more than 4 times in a row, yet I was there the 5th, 6th, or 7th, or 8th. And one thing for sure, I always end up positive at the end of the year. Though, of course, that's another thing for investment strategies and longer time frames, like crypto portfolio definitely was down last year, but that's definitely far other timescales. But anyway, despite that, understand it that way, okay? On the shorter time frames like that, out of 100 flow trades, I'm always ending with positive outcome. Always making more money than the losses accumulated. That's just something I'm 100% sure about. The thing is that, therefore, I need to apply the same old rules out of each and every 100 times I do trade this strategy. And deviating because I think this or that is something that I have done in the past and definitely doesn't make it any better. You'd rather like to let the market do its job instead of trying to beat the market with irrational assumptions. Though that's exactly the same thing that has happened in crypto with, of course, the crypto mindset, which means everybody is trying to be proven right or wrong. Everybody is trying to play who's got the bigger dick on social medias. And in that perspective, well, it is even dumber than before. So the thing that you need to assess in here is that the H1 time frame is in a flow trading. Even though people don't like it, it is. Remember, rising moving average and price rising faster than that. Okay, we've gone immediately in here to the opposite Bollinger Band without creating third range boundary and therefore buying the moving average. Though this is kind of the opposite pattern. You buy in here, you still have rising bottoms. So buying in here with a stop at the lowest bottom and waiting to either touch the opposite Bollinger Band, which was in here. In that perspective, in here, you can put your trade. You can put your trade at break even, which is what I did. And basically, what happens in here is I wait for the market to break the previous market top. Well, we did. So the actual flow is going on with the fucking cryptos. And yes, oh, look at the context boxes. It's so irrational. Yes, it's going high. It's going fast. It's going painful. And whatever people thought to think about that, it's gone too high too fast. This thing is going to just go down because it happened so many times. Same thing. Last times we've had those rallies. We've seen those rallies. They always end up in pain and blood. Jesus, same story, okay? Follow the goddamn rules, don't try to play God, and remember what you are doing in here. You are flow trading. Flow trading means if you're trying to give any rational sense or alter the strategy in anything or way that looks rational to you, you don't. What you've just done is just being a switcher, meaning that for whatever reason you decided to alter the risk strategies. You're altering the risk the risk management of your strategy, which you shouldn't. Every professional knows that. The only way to be consistently profitable in a market is just to try being consistent instead of trying to be better than your strategy. The strategy is actually better than you, so don't try to play God by switching the rules on here or there, or because this trade feels different to me. No, don't make any single trade different than the others. Follow the goddamn strategy. It's absolutely necessary. First of all, because it brings you a shitload of peace of mind. You're going to be a lot more efficient in your trading if you just get away from all those psychological mismanagements and external pressures. But most importantly, fuck, you're going to start making money. There's just really one thing I can tell, learning from my own experience into trading. The only moment in which I turned profitable in trading is when I got that lesson. Stop trying to make sense of things. Stop listening to the assholes out there. Just try to apply consistently the same old things over and over again. It is profitable out of 100 trades, and don't try to make it any rational on the latest 5 or 6 stuff. Something that happened 4 or 5 times isn't a pattern, is nothing more than a vision of your brain, which is, just like every other brain, trying to create new patterns. We're built that way. So go easy on you guys. You feeling that is just absolutely normal. I was feeling that back then. You are feeling that, and the next one after you will do as well. Just be smart enough to understand that professional trading must get rid of that. All right? So until further notice, what am I doing now? Well, the second flow is activated, which means now I have a guaranteed outcome of money, which means I am now in stop win, okay? Because basically I'm gonna let myself ride that thing until what? Until the context reverse builds a third range boundary. And remember, needs to stop on the third range boundary, because if we fuck it all up to make a squeezed third range boundary, well, I am still in. What I want is the market building and taking a third range boundary. At that point, I will profit take and let the market digest, waiting for the absolute Bollinger Band, which I will definitely buy again for another flow. That's really the way it is. Okay, folks, I make it easy on me because I know the pattern, I know what I'm going to do next. And if the market deviates out of this for whatever reason, I don't know, the market could do this and just take my stop loss. Well, yes, I'm going to lose all my gains. But like I said, it's one time. Out of 100 trades, yes, there are probably one or a couple of times in which you could have made a nice gain and the market will take it all over. Will take it all out. But still, the 99 other trades will still be profitable net-net. And this is the only thing you should know. If there is a pattern, that means something has been tested more than hundreds of times. It's really like the basics. And when I say, I mean flow trading, I probably have taken more than thousands of these trades. That's really the way it is. And it's net positive in the end. So don't try to make it any personal. And most importantly, don't try to reason on a trade-to-trade basis. Try to reason in a large scale, and even if that one seems, well, way too long, way too outrageous, it sounds different from the others, don't make it any different. Just let it ride and follow the same old rules and don't try to play God. This is this week's lessons, guys. Don't try to make any trade specific. Try to see whatever it is that you're doing as a pattern and apply the fucking pattern itself. Don't try to go anywhere beyond that. That being said, see you guys later.